It's Friday and Gary Wagner joins us again this week for Chart This. Gary, good to see you.
I'm glad to be here, and it has been a whirlwind week to say the least.
And what a week for gold, Gary. On Thursday, it hit a 4-month high. What do you make of the movements we've been seeing in the gold market?
Well, up till yesterday's dynamic move, which of course we'll talk about in a little bit because it is part and parcel of what happened over in Switzerland, but we've seen a real resilience really in the marketplace throughout the year. And I think the biggest factor that we've seen is a weakness in the U.S. equities markets. They've been under pressure pretty much for the entire year, and that has been supportive of gold.
And the Swiss, Gary, delivered a big shock to the marketplace on Thursday that really moved gold.
Well, I mean, first of all, the news that came out was absolutely and utterly a surprise to everyone. It's the old adage of, in terms of looking at a technical trader, we typically are sitting on the back of the boat looking at the wake that the boat creates as it moves forward, but only the captain knows when he's going to turn the ship. In other words, we're using historical data to try to predict the future. When a move like this happens, it's absolutely unpredictable. The captain turned the ship. In other words, the Swiss decided to decouple the Swiss franc from the euro. I believe the fix at 120, and that sent markets into a tizzy.
So we're speaking ahead of the scheduled release of CPI numbers coming out at 8:30 this morning, Gary. And inflation and deflation, these are topics that are really circulating in the marketplace right now. Do you think that today's numbers could impact and affect gold prices?
Well, they certainly could. And the big thing that we're going to be watching, of course, is oil, because oil traditionally has been the largest component of inflation. As oil moves up, of course, it's very, very inflationary. The same goes true when oil moves down. That's very deflationary. So I think we'll see some interesting results today.
And the gold and U.S. dollar trading now in tandem, Gary. This is not something we usually see. What do you make of that?
Well, absolutely. Well, you know, whenever you look at the dollar as it compares to gold, since we're pairing it together, a tandem move that simply means that gold has enough velocity to be able to overcome any of the negative effect of a positive dollar. So as the dollar's moving up, if you see gold moving up at the same time, you're really looking at a salmon swimming upstream, so to speak, because the price of gold had to overcome that dollar change first to just get to even before it goes into positive territory.
All right, Gary, on that note, let's get to your insert today. What have you brought us?
Well, I'm going to do a special segment today. Really, what I want to do is take a look at the Swiss franc. I also want to take a look at the pairing of the Swiss franc and gold. I think we'll find that quite interesting. And most importantly, over the last couple of weeks, we've been looking at a potential breakout of gold at roughly about 1217. That was the mark that I put on last week's show. We went into the market at 1217, and I want to talk about the breakout that we've seen and some of the target areas that we think gold could go to in the most near future. What a week we have seen in gold. Gold trading to new 4.5-month highs. The Standard & Poor's 500 continues under pressure. Dollar continues to move higher, and oil continues to move lower. Of course, the big news this week was the announcement on Thursday by the Swiss National Bank that they were going to no longer peg the Swiss franc with the euro at 120. That sent gold flying to the upside, and of course, the euro under tremendous pressure. Even more so, the final surge that we saw on Thursday as gold moved $30 higher gave us some really strong technical confirmation that what we have been looking at, this most recent rally, could easily be more than simply a counter trend. The key question that gold bulls have been asking themselves is whether or not this most recent rally, in other words, when the market hit roughly 1130, call it beginning of November of last year, and began to trade higher, whether or not what we were looking at was simply a counter trend to the overall bearish trend, or were we witnessing some sort of key reversal, some pivot point off of this new low at 1130. Of course, for a market technician, we need to see a series of higher highs and higher lows to confirm that assumption. We were getting a series of higher lows, quite apparent as we look at the market moving up the ladder, so to speak. But up until the point in which the market really took out these highs at 1231, we were not getting the higher highs that we needed really to confirm this assumption. Well, we certainly got that this week. So could this most recent move be a game changer in terms of our outlook on gold? Well, it certainly has given us some information that is necessary for us to go under the assumption that we are entering some sort of a bullish trend. Now, we really got our first indication. We, for example, made a recommendation and we got long this market roughly at 1217. And we did that as the market came in and broke above this long-standing resistance line. It did back off a little bit. We were not stopped out. And of course, then we saw this market literally barrel through and move to new highs as it has now exceeded this high at roughly 1255. And of course, when we look at the most recent moves on a daily chart, we can see that we've now exceeded this former top here at about 1250. You can see where the market is trading at. Our next real level of resistance doesn't come in till about 1300 to 1315 per ounce. So the key level that we're really looking at in terms of support was this former top at roughly a 1253 to 1255. And as you can see, we're recording this on Thursday evening. The market's trading at approximately 1256. One thing I absolutely do believe is we're probably going to see some fireworks next week. I want to invite all of those listeners that enjoy this type of analysis a free trial to the daily video newsletter I offer, the Gold Forecast. And to get that, simply go to our website, thegoldforecast.com. You'll see this free trial button. Go ahead, click that, fill out your membership information, and you'll be able to enjoy a daily commentary and video report. Again, our analysis in gold.
As always, Gary, thank you so much for putting that together for us. We'll see you next week.
My pleasure as always. And I want to wish all of our Chart This viewers a great weekend and prosperous and successful trading next weekend. We'll talk to you real soon. Bye-bye.
And thanks for watching this edition of Chart This with Gary Wagner. We hope you enjoyed it. We'll see you next week. Have a good weekend.